Good day traders, it's Tuesday, October of 17th, and this is Alan Hong, market analyst of MY-GKFXPrime. So I'm going to share my daily analysis through this video, and first of all, let's review the major market movement. So first instruments we're referring here is the dollar index in 4-hour chart. The US dollar index, which measures the greenback strength against a trade weight basket of 6 major currencies, traded more modestly higher against a basket of major currencies, rose by 0.1% to 93.01 on upbeat manufacturing data, but gains were capped as investors' concerns over continued slowdown in inflation weighed on sentiment. So the dollar traded sideways as early sessions optimisms on the back of upbeat manufacturing data faded amid investors' concerns over disinflation following Friday's inflation report. So the Federal Reserve Bank of New York says that its Empire State Manufacturing Index rose to 30.2 in October after reaching 24.4 the previous month, and the reading below zero points to contractions. So the Labor Department said on Friday its Consumer Price Index rose 0.5% last month after advancing 0.4% in August that missed economists' forecast of a 0.6%. The subdued inflation data failed, however, to detail the investors' expectations for a yield-end rate hike after Federal Reserve Chair Janet Yellen on Sunday reaffirmed the Federal Reserve commitments to raising rates. So according to the Federal Reserve Rate Monitor tool, 85% of traders expect the Federal Reserve to hike interest rates at its meeting later this year in December. So the steady expectations for a year-end interest rate hike prompted money managers to trim their bets on the dollar, falling as data show that net short positions on the greenback fell for the second week in a row. Net short dollar positions against 6 major currencies fell to 15.4 billion from 16.8 billion the week before, and this is the data from the CFTC show on Friday. Euro weakness meanwhile aided the dollar's strength, with the pair EUR-USD fell 0.1% to traded around 1.1810 amid an uptick in political tensions in the region after the Spanish government said Catalan authorities must end a bid for independence by Thursday. While the Canadian dollar was weaker on Monday, with USD CAD tagged on 0.44% to trade at around 1.2523 after data show foreign investors slow their acquisitions of Canadian securities in August. So international investors bought 9.85 billion in August, down from 23.97 billion in July. The Aussie was dropped in Asia on Tuesday, traded at 0.7839, down 0.17% as central bank minutes pointed to continued concerns over housing ahead to set the tone. So the RBA meeting minutes note household debt levels remain elevated and need to be watched closely. According to the minutes of its September's policy review released on Tuesday, the RBA held at a record low 1.5% in the meeting. Having a tag in commodities markets, gold prices held above $1,300 on Monday, fell $1.61 or 0.12% to traded around $1,302.83 a troy ounce. So it was struggling off an update in the dollars, and treasury yields as safe haven demands remain steady amid ongoing geopolitical uncertainty and concerns over the pace of US interest rate hikes. So on the heels of snipping a 4-week losing streak, gold price made a subdued start to the week, trading in a narrow $6 range amid a lack of top-tier economic data release. Ongoing tensions over Iran, however, limited downside momentum in the precious metals, while concerns over the pace of interest rates hikes beyond the widely expected year-end December rate hike was strengthened the sentiment on gold prices. So gold prices rose more than 2% last week after the data showed inflation missed expectations and lessening the Federal Reserve case to adopt an aggressive tightening stance on monetary policy. So Federal Reserve Chair Janet Yellen on Sunday, however, reaffirmed the Federal Reserve commitment to raising rates, and gold is sensitive to move higher in US rates, which leave the opportunity cost of holding non-yielding assets such as bullion. As for the oil price, it was settled higher on Monday, rose 42 cents to settle at $51.87 a barrel as conflict between Iraq and Kurdish forces broke out in the oil-rich city of Kirkuk, raising concerns over supply disruptions in the regions. So oil prices surged on the back of concerns over supply disruptions in Iraq and the second largest OPEC producer after Iraq forced march into the oil-rich city of Kirkuk amid rising tensions between Baghdad and the Kurdistan regional governments. So the show of force from Iraq's forces comes after weeks of unrest in the regions which followed the KRG vote for independence in the September 25 referendum. So Kirkuk accounts for 200,000 barrels per day of the roughly 600,000 barrels per day of oil produced in the KRG regions, also supporting an uptick in the crude oil price over concerns over the new US sanctions against Iran after President Donald Trump on Friday refused to certify to Congress that Tehran is complying with the 2015 Iran nuclear agreement. Under the agreement, Iran agreed to restrict its nuclear program for at least 10 years in exchange for lighter economic sanctions that had crippled its economy, wiping out nearly 1 million barrels per day of Iranian oil exports from the markets. So the potential threats of supply disruptions in the regions has prompted analysts to raise their forecast on oil prices for the quarter, and analysts at Bank of America forecast Brent to average $54 per barrel this quarter. So now we're gonna review the highlighted economic data that released on yesterday, Monday, as well as today focus data and events. So yesterday, China has released its CPI and PPI, which with the 0.5% growth in CPI, right, and the 6.9% growth in PPI, which is better than in expectations. Besides that, during the European trading hours, European Union has released its trade balance for August, and it was disappointed with 16.1 billion, okay, lower than the previous and the expectations of 23.3 billion. Right, so as for today, we got the data from New Zealand, okay, during the early morning. So New Zealand has released its consumer price index, which referred as inflations, and it was at 0.5% growth, which is better than expectations of 0.4%. So during European trading hours, UK is going to release its consumer price index for September as well, and which expected to grow better than previous with 3% growth. So in Eurozones, Germany is going to release its Zoo economic sentiment for October, which expected to be battled from previous 17 to 20, and they are going to release the consumer price index for September as well, which we expected to remain the same at 1.5%. So during North American trading hours tonight, United States is due to release industrial productions for September, and which expected to be better from previous negative 0.9% to 0.3% growth. Its technical analysis sessions. So first, instruments were referring to the Great British Pound against the US dollar pair. So the sterling was traded on a rebound in dollars, with GBP USD pair retraced from recent high at the Fibonacci retracement level of 50 or 1.334. So it closed below the support level of 1.326, signaled for further downside. So referring to the both movement lines in MACD indicator, which cross and pointing downwards, the pair is suggested to drop further in short term, and we could refer the next support level at 1.312. On the upside, only with a closure higher than the Fibonacci retracement level of 50 at 1.335, or the trend direction shifting thresholds will open up a door for the bull. In fundamentals, UK is due to release its inflation data as consumer price index later today during European trading hours, which expected to set the tone for the further directions of sterling. The single currency was weakened on Monday amid an uptick in political tensions in the regions after the Spanish government said Catalan authorities must end a bid for independence by Thursday. So against the dollar, it traded lower and falling towards the previous low at 1.167, with remaining the current downtrend structures. So as for resistance level, we could refer the nearest at 1.183. And meanwhile, investors now are eyes on the inflation data as CPI and German zoo economic sentiment reports due later to date, which could provide higher volatility to the single currency. The Kiwi traded slightly lower on Monday. We traded from recent high at 0.719 and currently traded near to the support level of 0.715. But however, NZD and USD pair remain traded in a downtrend structure, disclosing below the support level of 0.714, we are suggesting for further downside and could fall further towards the next support level at 0.705. On the upside, the first resistance level, we could refer back to 0.719. The Aussie dropped lower in Asia on Tuesday as central bank minutes pointed to continued concerns over housing ahead to set the tone. So against the dollar, AUD/USD traded pressure by the both moving edge line which formed a dive cross previously, so signals to move lower in short terms. But however, it remaining the uptrend structure, disclosing above 0.794, we're suggesting to move further higher and could surge towards the next resistance level at 0.812. So on the downside, we may see a further bearish with a closure below the support level at 0.781. Then we could refill the next support level at 0.773. The safe haven Japanese yens remain traded within a range against the dollars, with the pair USD JPY surged back to the level above the resistance level of 112. So in 4-hourly charts, the both moving edge lines seem to form a dive cross, signaled to retrace in short terms and could fall further towards the next support level at 111.1. However, the pair remained traded as an uptrend structure, thus with a closure above the recent high at 113.5 will provide signals of continuations of uptrends. Then we could refill the next resistance level at 114.4. As for commodities, gold price fell lower on Monday, shrugging off an uptick in the dollars and treasury yields as safe haven demand remained steady amid ongoing geopolitical uncertainty and the concerns over the pace of US interest rates hikes. So in 4-hourly charts, the precious metal failed to surge above the Fibonacci retracement level of 50 at $1,308 a troy ounce. Additional, with a closure below the support level of $1,297, it signals for further downsides and could fall towards the next support level at $1,284 a troy ounce. On the upside, only with a closure higher than $1,309 will open up a door for shifting trend directions, becoming uptrend. And oil price was settled higher on Mondays as conflict between Iraq and Kurdish forces broke out in the oil-rich city of Kirkuk, raising concern over oversupply disruptions in the regions. So the US West Texas Intermediates continued to trade higher and pointing towards the previous high at $52.80 a barrel. But however, referring the MACD indicator, the both moving lines were narrowing, signals to retrace in short terms. So closing above $52.90, we're suggesting for continuations of uptrend, and the next resistance level we could refer to $53.70. On the downside, with a closure below $51.10 will provide a short retracement signal and could fall further towards the next support level at $50 a barrel. To date, please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.